So yesterday we talked about consolidation, and some of you sent me their screenshots about consolidation. I really appreciate. So kama hujanitumia, please make an effort to send me all those assignments. So let's do a very brief introduction into forex trading entails, because there are some people who are very new, and I think they are hearing about forex trading for the first time. Yeah. So let's start with the introduction. So what's forex trading? So forex trading, um, since we did the class yesterday, let me just do a very brief one. Then we can just continue from where we left. So forex trading means simply means foreign exchange. This just means foreign exchange. So that's what forex trading is. Simply means foreign exchange. So forex is a digital market. That's why we call it the forex market. These are digital market where we exchange digital products. We exchange digital products. So in our market, in our forex market, we don't exchange the tangible products. So some of the items that we trade in, we exchange in our market, I'll be categorizing them in terms of the features. I'll give the features that make up the forex market. Then from the features, we are going to look at the commodities that we can go to our market and exchange. So that's some of the features that make this to be called a forex market, make this forex thing to be called a forex market, features of a market, and this is of a forex market. So some of these features of a forex market and say include the features of a forex market. We have the commodities. These are the items we go to exchange. These are the commodities. From the commodities, we have the buyers and sellers. From buyers and sellers, we have the brokers. Then we have the platforms. The platforms. So these are the major features that will make us say this qualifies to be called a market. These are the four features. So the commodities, these are the items we go to the market to exchange. We have the buyers and sellers. Obviously, in the market you must have buyers, people who came to buy, people who came to sell. Then obviously we have brokers in every market. These are guys who, if you're exchanging the farm products like mangoes, they go to Kambani, buy the mangoes at 3 bob. They come to Nairobi to sell to sellers at 10 bob or 15 bob. Then the sellers will sell at 50 bob. So those are the brokers. Those are the middlemen. Then from the middlemen, now we have the platforms. This is where we do the real trading. We call it the platforms. So those are the major features that make up our forex market. So when you look at commodities, the items that you can trade in our forex market, some of the items we can trade, we have currencies, currency pairs. Currency pairs include combination of two currencies. What are currencies? Someone tell me the currency that you use in Kenya. Kenyan shillings. Okay. Okay. The Kenyan shillings. Now, what currency do the people in the US use? Watu wa US wanatumia US dollar. Okay. uh, watu wa UK. Yes, watu wa UK wanatumia, they use the pound, eh? The euro is for Europe, eh? Yeah. So those are what we call the currencies. So for us to trade in this market, you trade one currency against a currency. So that's why we call it a currency pair. You are trading one currency against another. So if you can say, I want to trade the euro against the US dollar. Okay, you can say, I want to trade euro against the US dollar. You can say you want to trade the pound against the US dollar. You can say you want to trade something like Canadian dollar and a New Zealand dollar. Okay, you can say euro against the US dollar. You can say US dollar against Japanese yen, etc. etc. So all when you combine the two, we call them the currency pairs. So one pair, one currency will become the buyer, and another one will become the seller. So those are what we call the currency pairs. Okay, so that's a complete set where you can trade within the two. So zote mbili you can trade, um, unaweza trade zote mbili. So I said one will become the buyer and another one will become the seller. Those are the currency pairs. Now from the currency pairs we have metals. Examples of metals that we have which you can trade, we have something like gold, we have bronze, and we have the silver. Those are metals. Okay, so how do you trade the metals? Remember, as you trade the metals, you also need to combine the metal with a currency. So you can say, I want to trade bronze against the US dollar, gold against the US dollar, silver against the euro. Remember, even if you are trading a metal, you must pair it with a what? With a currency. Okay? And the initial for gold is usually XAU USD. XAU, that is gold against the US dollar. So you must pair this metal with a currency. It's a must to pair with a currency. Okay, so those are metals. Now from the metals, we have items we call the cryptocurrencies. What are cryptocurrencies? Now the cryptocurrencies, these are digital coins. These are digital coins which have been given value. Okay, these are digital coins. Examples of the digital coins, we have Bitcoin. You guys, everyone knows about Bitcoin. That's the most common cryptocurrency. Bitcoin. Um, we have XRP. We have Solana. We have Ethereum. We have Bitcoin, Ethereum. We have the meme coin. We have the Trump coin. We have the Spell. We have the Dogecoin. There are so many. Okay, all those are cryptocurrencies. Now, for you also to trade the cryptocurrencies, you must pair that coin with a what? With a currency. So you can say, I want to trade Bitcoin against the what? The dollar. I want to trade XRP against the euro. So that's why we call them the cryptocurrencies. Okay. So cryptocurrencies, these are digital coins. So for us to trade the digital coins, we have also to pair these digital coins with the what? With a currency. Now from there, now let's look at the other item that we can trade in our market. The other item we can trade the cryptocurrencies. Mm, let me see. Ni gani nimesahau? Metals, cryptocurrencies, and the pairs. Nimesahau. If I remember them, I will talk about them. So those are the major commodities that we are going to look at in our forex market. Now, for me, I said I am going to teach you on how to trade gold, because the reason why I teach you to trade gold is because gold is the most volatile pair. Gold is the most volatile and the most tricky one and the hardest one to trade. So if I teach you on how to trade the hard one, when it comes to the pairs, when you get the pairs, it will be just a walk in the park. It will be easy for you to handle any other pair. So these are now the commodities that we're going to look at. Now, we will not talk about the buyers and sellers. Let's talk about the brokers. So the brokers, the work of the brokers in our market, they help us all, they link us to the what? To the Forex market. This is the work of brokers. So the work of brokers, they connect us directly to the Forex market. They are the guys in between. We have talked about brokers. So in our Forex market, we also have brokers. And for you to access the Forex market, if this is Victor, for you to access the Forex market, you have to go through the broker so that the broker can give you access to the market. If you make money from the market, it passes through the broker, and from the broker now, you get your money into your pocket. Okay, so it's like a chain. So generally, the broker has to be in between because that's the only person who will allow you to get connected to the forex market. So we call them the trading brokers. Now, we have so many brokers we can have, but the broker that we're going to use that I can recommend to my students, we have the Zealand's markets. I'll talk about that when we come to that level, Zealand's markets. So how do you trade? So for you to trade, we connect your trading account to the broker. Then from the broker, we connect to the now trading platform. So the platforms that we are going to use, we have before we talk about the platforms, we talk about the brokers. So how do the brokers earn their money? The brokers earn their money out of commissions. Any transaction that you do, they take something small. Those are commissions. They also earn money out of every trade that you place, that is also a commission. And they also earn money out of the exchange rate. For instance, kama exchange rate ya Kenya shillings na dollar ni 130, wanaweza kuuzia na 135. Okay? Vice versa, they can sell to you at 127 instead of the standard one, which is out the market price, which is around 130. Currently, it's around 129, 128. So that's how they earn their money, the brokers. Now, from the brokers, let's talk about the platforms that we are going to use. Some of the platforms that we are going to use, we have platforms that we are going to use. Obviously, we need the broker's account. So this is where we deposit our money from your M-Pesa or from your bank, from your crypto wallet to the broker's account. Then from the broker's account, we connect to the MT5. We call it the Meta Trader. And this matter, we are going to use MetaTrader 5. There is also MetaTrader 4, but that was old version. So we are going to use MetaTrader 5. Now from the MetaTrader 5, this is where we do execute our trades. Execute. Now this is where we interact with the market now. This is where we execute. This is where we place buy or sell. We call it the MetaTrader 5. This is what matters a lot. So once you deposit your money into the broker, it's connected to MetaTrader 5. Then from MetaTrader 5, you can execute, buy and sell when you analyze the market. Analyzing the market, we do it on this platform we call the Trading View. Trading View, this is where we do analyze our market. And analyzing the market simply means we want to know when is the right time for us to, when to buy or sell, or when to execute, when to exit, when to enter the market, or when to exit the market. So on TradingView is a central point. Now the work of TradingView, this is the platform that I'm using, the platform that I'm teaching with, this blackboard here, we call it the TradingView. So this is where we check the prices in the market because, people think Forex is gambling. They think we are betting. They think this is a betting site. That's why they say, now you guys, nikwekelea 1000, unaona naweza pata pesa ngapi? Nikiekelea 2000, unaona naweza pata pesa ngapi? Okay? And I simply tell them you lose all your money because you already have that mentality of gaming, of gambling. Unasikia mwingine anasema leo sijabet, unashindwa like bro, you think forex is betting? So the reason why I can justify forex is not betting because this is a legit market, and this legit market cuts across the globe, and it doesn't favor anyone. It doesn't favor anyone. It operates and cuts through the globe. So if this is the market that I'm looking at it right now, you can see the current price of gold is 50.21, and this is the global price. If Trump opens his laptop today, this early morning, this late night, Trump will see the same price. For the guys who are in UK, for the guys who are in USA, like who's in the USA? Yeah? Isabella. Okay, if Isabella opens her laptop right now, she'll see the same price that we are seeing right now. The same way to Victor, the same way to Sarah. So it doesn't favor anyone. Whether you are in UK, whether you are in Canada, whether you are in Australia, whether you are in wherever you are, whether you are in India, whether uko Ushago, Machakos, you'll still see the same market that I'm seeing. So it doesn't favor anyone. So these are the legit market because the same platform. This is where we check the changes in the prices. This is where we check. Just a minute. Okay. Yeah, so this is where we check the prices. This is where we get the graphical representation about the prices in the market. So if you want to buy gold right now, if you want to go and buy the physical gold, this will be the price. You can see this number here, 50.21. You can see it's changing because the buyers and sellers keep on fighting each other. They try to overdo each other. So that's why you see the price keeping on changing. So when you see these numbers here, don't get confused. Okay, when you see these numbers changing, don't get confused. This is the prices. When you look at the USD JPY, look at the rates. These are the rates. Okay, so you can see it keeps on changing every now and then. Now, let's look at this platform we call the Trading View because I talk about the MetaTrader 5 when tukifika your level, that's when I talk about the MetaTrader. But for now, let's talk about Trading View. So Trading View, this is like a graph. You guys remember Mwalimu wa Maths? Eh? So the graph represents, this is where we get the price of gold in the market. Remember, we are doing a gold chart. This is where we get the price of gold against time. This is where we have the calendar. So this is time against price, or price against time. So if you look at my chart, you see 61, 6,000, 5,900, 58. This is now the prices of gold. Then when you look at this lower side here, this side here, this is now the time and duration. You can see this is the time against prices. So these are the prices. So if you want to check the price of gold is at what's the time right now? What's the time? At 9:02. Let's check the price of gold right now. If you want to check the price, so the price of gold, you place your mouse here. So at 9 a.m., On Tuesday 17th of March 2026, the price of gold at 9 a.m. was 50.17. Okay, so you can see this is the price, the time here against the price. So the price is at 50.20. And now the price at this level around 9 a.m., the price is currently at 50.10. So that's how you check the prices. So the work of trading view, this is where we check the prices. This is where we know, is the market going down? Is the market going up? This is the platform that we use. Now, from the platform, now once how to set up your MT5, because everyone was asking me about in my inbox how to set up MT5. I said visit www.tradingview. Let's visit TradingView and see. This is TradingView. So once you open your TradingView like that, you'll see a button here telling you to sign up. You'll see a button here telling you to get started. Others, it will tell them to sign up. So once you click that button, get started, you'll simply enter your email. You enter your email and you just enter your email and that's all, and your name. Okay. Then from there, now you just come to search here. You just search the pair that you want to trade. So for us, we want to trade gold. You can search gold. All the initial for gold, the short form for gold is XAU. That is gold against the USD. Like that. That's the initial for gold. So it's very simple to set up. Now, before we go on how to set it up, we have other digital markets. You know, you guys think Forex is everything. We have other digital markets where you can trade and make money. Examples of those digital markets, we have the stocks. You guys have heard about investing in stocks. You guys have heard about investing and buying shares from companies. This is the funds, is buying shares. There's also another option for futures. I'll talk about the futures as we grow. There's also the Forex bit of it, and the Forex bit of it, we said we are just dealing with the what? Currency pairs. Okay, you can see Forex generally deals with currency pairs. All those are currency pairs. You can see one currency against the other. Australian euro against Australian dollar, the pound against Australian dollar, Canadian against Japanese yen, Canadian dollar against Chinese francs, etc. etc. All these are currency pairs. Okay, so you can choose any pair and say I want to trade New Zealand dollar against Japanese yen. It's free. Get in, open your chart, analyze and buy or sell and make money. Then we have the cryptocurrencies. Yeah, the cryptocurrencies you can see. We have the XRP, Total, we have the Ethereum, we have the Donkey, Solana, XRP, BNB, ADA, we have Bitcoin, we have Tau. There are so many. Every day, new coins are being launched. We have the Pepe. There are so many. There are cats. There are dogs. There are. I can see River USD. I can see Near USD. I can see Link USD. So there are so many digital coins that you can invest on. There are so many digital coins you can say Shibu. Uh, there are so many guys. These coins are so many. So all these coins you can invest on, and you can also analyze and make your money. Okay. Then we have indices, bonds for government. We have the economies for governments and bonds for banks, etc. etc. All these are different platforms that you can make money. So when people say Forex is a scam, waambie bado hawajui stocks. Ulize kama Nairobi Stock Exchange is gambling. Ask them about that. This is where Nairobi Stock Exchange lies, where you can invest in Safaricom, you can invest in KPLC and become a shareholder. You can invest in Uchumi, Naivas, Total, Shell, all those companies. You can also decide to go international, invest in Google, invest in Meta, invest on Tesla, okay? Invest in Nvidia, Microsoft, Apple, Netflix. You can invest in all these companies. You can buy stocks, you can buy shares from all these companies. So all these are different markets where you can make money. So Forex is just one of the branches of these digital markets. So for a case here, because Forex, because you are trading gold, gold is not in Forex. We said Forex is simply the currency pairs. And because gold is not a currency, it's usually located here. You click all, this is where we get all the items, a combination of all these different markets. So gold is within a category of metals. So you just search XAU USD, that is gold. Then you can select the broker that you want. If you select any broker that you select here, the market is still the same. So you can select any broker that you want. Personally, I usually recommend the Owanda. It's more accurate, it's more timely, it's more to date. So then it brings you to this chart. Okay, now since I'm using my chart for analysis, Owanda, let me just select another random broker. You just use Paperstone. So it will give you this kind of a chart, and this is what we call the graph. There are so many types of graphs. You remember in high school, we had the line graphs, we had the area graphs, the columns. You remember all these. So this is just a graph. Usianze kuona candles, uanze kuona ni kama these are miracles. This is just the normal graphs that we learned in high school. As we learned in campus, the area graphs, the volume graphs, all of them. These are just different graphs. Okay. So what we recommend as traders, we usually use candlesticks because the candlesticks, they help us to, they give us an insight of where the market is going, what is going to happen next. It's easy for you to analyze and determine the next move using candlesticks, unlike using the line graphs or the volume graphs. So that's why we use all these, and all these we call them the candlesticks. And I gave an assignment yesterday to study about candlesticks. Speaking of the days, learned about the candlesticks yesterday. We learned about candlesticks yesterday. Niambiwe wale walisoma candlesticks. Hakuna mtu amesoma candlesticks? Yes. Yeah. So examples of candlesticks that you learned. Examples of candlesticks that you learned. Bearish and bullish candles. Another one. So the bearish and bullish candles, those are just general. Generally, there are two major candles, the bearish candles and the bullish candle. Now, these small candles, they have their names. I told you to research about the names of these. This big candle has a name, this small one has a name. And that's what I want you guys to go and study about. All these candles have different names. There are some candles we call the hammer, the morning star. Yes? Yes. There are so many. So I need you to go and study about these candlesticks. Please go and study about these candlesticks. Let me see. Let me check. I think I sent someone the candlestick Bible. Just candlesticks. Let me check. I shared with someone candlestick patterns. Yes. So let me I'll share this in the group. Please make sure you go through these all these candlesticks. I'll share them in the groups. Just study about them. Just get to know them, because personally I will not teach about candles. I hate candlesticks. I hate theories. I'm actually struggling to do this theory class. I hate theories. So nimetuma. So check it out. So after this, just go through all those kind of patterns. All these candles have different names and different meanings. So there are candles kama hii kizikito, okay, hizi they mean the indecision candles, which simply mean the market can take any side. The market might either go up or down. So they sometimes give us a linkage where the market is going. Look at these two candles. What do they mean? This market can either go up or can go down. For 50-50. This one, this is a strong bullish candle. It has its own name. I will not talk about that. Nimesema I hate candles. Nilisoma hizi vitu nikakuwa confused, but I just hate the candles. I hate the theory bit of it. I love practicals. That's why I said we are going to do what we are going to do in this class. Mostly we are going to do the practical bit of it. And because we just want to know how to make this money as fast as possible. So go and study about all these candles. It's very nice for a trader. Usiulizwe na random stranger the candle that you know, but ujui any candles, hata ujui candlesticks ni nini. So go and study about these candlesticks. I sent you the names. I sent you a PDF, a document, or a link talking about all those candlesticks. So the assignment for today is study about candlesticks in Forex, meanings of different candles. Okay, then I need you also to do the analysis, yesterday's analysis. Identify consolidation and breakout. That's what we talked about yesterday. So I need you to go and identify this consolidation and the breakout. Now, from that, we said we have the bullish candles and the bearish candle. We talked about the three major moves in the market. We talked about the downtrend, and we talked about the uptrend, and we talked about the consolidation. Okay, and examples of a consolidating market. This is an example of a consolidating market, and we said after every consolidation there must be a what? There must be a breakout. After every consolidation, there must be a breakout. And we get the breakout either on the upper side or on the downside. Okay. So after every consolidation, there must be a breakout, either bullish one or a bearish one. So when we get a consolidation after a breakout on the bearish side, what do? We sell. Okay. When we get breakout on the upper side, we do what? Breakout here we buy, breakout here we do what? We sell. That's what we talked about. Now, someone was asking me about a retest. Do you enter immediately when you see a breakout? Do you enter immediately? Some people asked me that question yesterday. So, what do you do when you identify a consolidating market? Let's see when we identify a consolidating market. So, for instance, if this is a consolidating market, we said we identify the highest part of that consolidation and the lowest part of that consolidation, like that. So that's the highest point, and that is the lowest point of that consolidation. So this market is just dancing within this region. So what do we do after this? We just sit and wait for the candle that will do what? We say we wait for the candle that will close above. And once the candle closes above your consolidation, we are going to take a what? We are going to take a buy. If the candle closes below, we are going to sell. What happens if this market continues to dance within this region? What do? We sit back and wait for the market to give us a what? We wait for breakout. Okay. So once the candle breaks above, we should buy. When the candle closes below, we should do what? We should sell. Do you sell immediately? Do you buy immediately? Now, for my new students, they are wondering, you sell, you buy, you sell, you buy. Yet they know, ukinunua nyanya 10 bob, you should go and sell at 50 bob. When you buy a pair of trousers at 1,000, you should go and sell at 1,500. That's what people think. That's what I know. That's what my new students are wondering. How do you buy? How do you sell? Now, we make money in the Forex when we follow the trend. We make money when you follow the direction the market is going. So if this market is going up, if the price is going up, we do what? We follow suit. We buy. Okay, because the market is going up, we follow the trend, and this is where we make money. So if this market is going up and you place a buy, you start buying, it means you're in profit. But if this market is going up and you decide to sell, you are going against the market. What happens? You lose. If this market is going down and you decide to go up, okay, if the market is going down and you decide to go up, what happens to your account? You are going to lose your account because you are going against. Okay, tuko kwa highway tunaenda juu na wewe unaamua kushuka on the same lane, what will happen? Okay, so we follow the trend. So kama market inaenda chini, we place a sell, we follow that trend. Kama market inapanda juu, we follow the same trend, tunapanda nayo. So we don't say, let me wait for the market to go up so that I can sell. Let me buy. Yes, we apply the same technicality where people say we buy low and sell high. I know we buy low when the prices is down, when the prices are lower. So when the price is down, this is when we buy because we want to see the price to go going up. So when the price goes up, we expect to do what? After the price goes up, after the buyers get exhausted at this level, we expect to do what? To take a sell. And I talk about this when I'll be talking about the support and resistance. So when the price is down, we buy so that the price can go up. When the price is down up already, we sell, targeting the price to go down. But we'll talk about all this when we'll be talking about the support and resistance. Now, I want to tell you something about the pattern, the candle pattern, how these candles are formed. If you look at the nature of how these candles are being formed, it's a very weird pattern. So when you look at the candlesticks being formed, let's say that is a candlestick which has already closed. Then you see the next one going up like that, the next one going like that. This is how the candles are formed. That the bullish candles. Let's see the bearish candles. You see them being formed like that. Okay, another one like that, another one like that. So you see such a pattern. So these candles are interlocking each other. When you look at this candle, it doesn't leave a space like that. Then you get another candle, leave a space, and we get another candle. These candles are locking each other. You can see this candle, it must go up again. Any candle which is being formed, the candle started there. The next one came down a bit, then it went up. The next one came down a bit, then it went up. So they are locking each other. There are no gaps in between the candlesticks. There is no gap between this candle and this candle. Okay, you not see the market forming like that. These candles must interlock each other. So when you see these spaces, we say these are imbalances in the market. Okay, and the market should not leave any spaces like that. So these candles must always lock, this one must lock with this one. Okay, at one level lazima ziguzane kidogo like that. This one, next one, it should not just start there leaving this gap here. It should come down to fix and close that gap in between and continue. The next one should not leave a space like this. It should come, close that gap and continue. So if you look at our market, our candles, they are being formed the same way. Just a minute, I don't know what has happened. Let me reset this one. Sijui nini imehappen saa hii. Kuna kitu nimefanya. Just a minute. Hello? Yes, morning. Can you call me after 20 minutes? Okay. Yeah, you can see if you look at these candles, how they are being formed. Let me refresh. I don't know why it's not moving well. Let me see. Yes, it's okay now. So look at these candles, how these candles are being formed. Let me change the broker. Look at how these candles are being formed. Can you see? They interlocking each other. Leave about this consolidation. Look at this one. This one came all the way up. The next one came down a bit, then it went up. The next one came down a bit, it went up. The next one came down a bit, then it went up. Even the bearish side, this one came down. The next one came up a bit, then down. The next one up a bit, down, up, down, up, down. So they are forming this pattern. You can see they are forming such a pattern. So that's how the candlesticks have been formed. The next one also you can see this one, this one, this one, this one, this one, this one, like that. You see such a pattern being formed. So they must come down to the, we call that a retest. They must come to close this gap in between so that they can continue. You see there's no gap here. So what happens when the candle closes above my consolidation? What happens when these candles close above my consolidation? We said when the market closes above my consolidation, we take a buy, right? So what happens to the next candle? The next candle after this one closes above must come down a bit to retest, close the possible gap which will be formed here, then the market will go up. So where do you enter as a trader? So you enter for a trade, you take a trade after this retest, the candle is closed above. The next one must come down a bit. Then you can enter at any level if this next candle touches the body of this previous candle. If this one, this candle here, if it touches this body, any part of that body, and it starts to form a wick, that's when you should enter. But I'll elaborate that when we go to the support and resistance. I'll elaborate on that. But just know, after the candle has broke above the, after the candle breaks above the consolidation, the next candle must come down to retest. Then you see such a move. So let's see an example. Look at this consolidation. This market gave me headache very early in the morning. That's why Doreen had to wake me up. Kama ungenipigia Doreen, ningeamka saa sita. So mkiona nimedelay, just call me, usiogope. Just call me either directly or on WhatsApp. Usiseme namsumbua, hapana. Just call me. Okay? So I woke up at 2 a.m., did my trading in the morning. Martin is in the group. Najua ameamka akapata so many messages. Then after that, I went back to bed at 5. So I was very sleepy. Karibu niamke saa 4. So this is the consolidation, and which candle broke above, broke below? This one broke that consolidation. And you can see the next candle after breaking, there was a retest, then it went down. Look at this consolidation here. What happened? It broke above. The next candle came down to retest a little bit, then it went up. So if it breaks above, the next one must come, retest a bit, then continue going up. Okay, but sometimes I can just enter at this level just after breaking above. Sometimes I do enter, though sometimes inaweza kufanyia very deep retest and you end up losing all your account. So what we tell people, just wait for a retest, just a small retracement, then you can now enter and take that trade. Let's say a good let's identify a very nice consolidation. Look at this one here. There was this consolidation. Let's say the consolidation started here. There's consolidation. What happened after that consolidation? Broke above, confirmation for a buy, then a retest, then the market went up. Another consolidation here, broke below. The next one retested, then it went down. So whoever was asking about when to enter, do you enter immediately? I think your question is answered now. After the market closes below or above, you have to wait for the next candle to retest. So you simply enter with the second candle. Wait for a retest, then you can enter. But I'll talk about entries. That's a way different topic about entries and exits. When to enter and when to exit. When do you know this is the right time to enter? When do you know this is the right time to exit the market? I'll talk about that. But meanwhile, let's do our assignment about consolidation. And if you have MT5 MetaTrader 5, you can simply download and you can download MT5 and start to practice buy, sell, buy, sell, buy, sell. Start just to practice and feel. Okay, you can identify Martin if if Martin is already trading. Martin, if you identify a consolidation, wait for a breakout. Once you get a breakout, open your MT5, you execute that trade. Very simple. Tuko pamoja. So I think we can take a break. Let's do that assignment. I give my beginners time to do that assignment. Then from that, we can do the next class in the evening. So let's continue with the analysis. I'm sorry, man. I don't do a lot of theories. I hate theories.